What is up, guys? Welcome into the Creed of Crypto podcast, where we provide immersive, essential, and evergreen strategies for the novice cryptocurrency investor. How you doing? I'm one half of your host, Broke Boi Crypto. I have here with me, as always, my friend and co-host, Crypto Ewok. The bull market is on. I am declaring it now. We're going to fight about it a little bit, I am sure, as usual, but I am pumped. This is going to be a good show. We have a lot to talk about. Banks are collapsing. Crypto, well, it's going the other direction if you've been paying attention to the market. So we're going to get into it all tonight. If you guys are here, do us a favor. Pick up your pointer finger. Click the left side of your mouse on the like button. We very much appreciate it. We're going to talk about a lot tonight. Leave your comments, questions in the chat. We will definitely get to them. Ewok, how you feeling tonight? What do you think about the markets?
I'm feeling good. It's kind of good that the banks are collapsing because people don't have faith in them anymore. So they're moving their interest over to crypto. Why not?
Sounds good to me. We will see more taxpayer dollars going to bail them out, including probably somehow even ones that are in Europe, like Credit Suisse, which we will get to as well. One of the biggest banks in the world now also having issues. So much to talk about tonight. Again, my name is Broke Boi Crypto. That's Crypto Ewok. Ewok, where can everybody find you typically?
I'm located at Crypto Ewok on Twitter and Crypto Ewok 5555 on YouTube.
Yes, sir. And so here's where we are. It's been an interesting last week. If you are in the chat and you also survived the great USDC depegging, the 24-hour ordeal that we experienced, raise your hand. We're together, brothers, in that survival. So congratulations to everybody that survived the great depegging. It is over now, and it's up only from here. So that's kind of where we are. BTC right now is trading at about 24.5K, and ETH, the ever strong altcoin, is at 1650. Hex right smack dab at 8 cents. We're going to talk about all of them and a lot more tonight. But the big news, so the other day, Tuesday, was the CPI print. It came in right at 6%. So this was actually, I believe, maybe slightly better than the market was expecting. And even without me knowing what they were expecting, I know it probably is better because the market went up right after. So intraday on Tuesday, we actually saw BTC get up to about 26.5, I think, was the high wick, breaking through that kind of 25.5K resistance we've been talking about for a while, although we haven't seen Bitcoin actually close at that rate yet for a day. So we're still kind of waiting on that. We just had market close a few minutes ago, right at about 24K. And super volatile. I mean, since last weekend. I mean, it's so funny how quickly we can go from, like literally Bitcoin was in the 19Ks like a week ago. We had USDC depeg. We had this bank in San Francisco or whatever, SVP, have a bank run on it, and apparently have a hex sign on the. I don't know if you saw that.
I did.
Yeah, on their sign out front. But yeah, why am I forgetting Silicon Valley Bank? So it has been a tumultuous last week. It's been absolutely crazy. We've had hell and heaven and everywhere in between. So Ewok, you have the Bitcoin chart up here right now. So yeah, take a look. What are you seeing? And I guess I'll ask you before we get into the particulars and the stories that we've had this last week. What do you feel? Where do you think we have been? Where do you think we're headed? Will you finally say that you feel the bottom may be in?
Okay. Well, it might be, but I'm still not sold on it. We still cannot get past this this level that I've drawn a long time ago. It wants to pass it, but it can't. It does not have the energy to get by it, and you still see as these are running up, the volumes aren't that great. I mean, they're pretty good. These couple run-ups were okay. But there's just not enough energy to get it past that resistance, and it just keeps getting shoved back underwater. And once you hit a resistance level like that enough times, it's going to drop. Now, this could have been that, and it bounced off of this long-term resistance line that I had drawn out from the top down. When you look at that line, now it did bounce off of that quite nicely.
Yeah, it did.
So, once we get past this and can hold a candle and close there, then I may change my mind. But this still looks like severe resistance, and it's just not going to break it.
So
and
those
it can just drop
gargantuan
into these levels. So
those
these
gargantuan
gargantuan
green candles
candles, nope, they
don't
don't do it for me. Nope,
Okay.
not yet. Not yet.
Well,
I'm still not sold.
I know I won't say who, but I know some folks that gargantuan green candles do make them feel pretty good. So,
Well, they make you feel good, yeah, but
yeah,
we'll see.
Yeah. Well, it's been a crazy week. It's just funny. Like, this market is so insane. Like, everybody's so afraid. We go back below 20K last week, the depegging and everything, the banks, and here we are, 5 days later. And yeah, I mean, in my opinion, I've been saying it since I believe some point in January, but I think we're in a new cycle now, definitely, and at the start of the bull market. And to me, this is why I mean, dry powder is for the most part gone for me. It's just kind of like, what else can you scrape in before Bitcoin crosses that key 28K or 30K level for me anyway? So, but let's get into some of these stories, Ewok. So I want to know what you think about. Let's start off with the USDC depegging. So this was obviously correlated and it related directly to the Silicon Valley Bank because it did have reserves with USDC. BlackRock was heavily involved with them, actually, like a large portion of what they have back in USDC was affiliated with SVB. So, too many acronyms here for me. So yeah, what did you make of it? I mean, obviously we expected at some point, with the Fed continuing to raise rates, which has been a calendar year now since they've been doing so, one of the things they always say, or one of the things speculated about is, well, until something breaks. Well, stuff's definitely broken.
Right.
We've got some major things happening here, and we're going to get into what we think the Fed is going to do next week at FOMC. That's coming up. But we are seeing this now. So what do you make of what's going on with SVB? And how shocked were you at the depegging of USDC? I know you kind of had to get in and make some moves a little bit whenever it happened, as much as you want to talk about with that. But yeah, what do you make of all this?
So I think the first problem is that we have, it's kind of well known. It's called Operation Choke Point. There are institutions out there that are trying to limit the on-ramping of crypto. They're trying to make it difficult. So by shutting some of these banks down that hold a lot of capital from major players, they're definitely trying to choke them out. Now, you have all the FDIC stuff that's insured up to $250,000, which is, fine and dandy, but a lot of these people had way more than that. We're talking, several millions of dollars in there. Now, will they get bailed out fully? Who knows? Like, that's still yet to be seen. I think they'll get the majority of it back. But you still see stocks down for JP Morgan. You see Chase. You see all these other banks are going down too. They're the stocks plummeted today again. People are losing faith in the government, in the Federal Reserve, in all the system. The system itself is breaking. The game that they were playing, which was the game that FTX and some of these other things that failed. The banks are doing a very similar thing with the long-term treasury bonds. And the more that they raise the rates, the less yield that they're making on the products that the government are saying, here, you should buy these, and get rewarded that way. So, as they keep raising rates, these systems are going to fail. At the same time, I think this is kind of a way for them to expedite the CBDCs into play here, saying, well, guys, you can't trust the banks. Why don't you bank yourself and use our new central bank digital currency where you can spend it without banks' approval? You can do whatever you want. I can just totally see this coming as a narrative. Make it hard to get into crypto. They'll limit who you can and can't exchange with once it's in the system. And on-ramping and off-ramping could get very difficult. So I do know some of the best ways, even when the dollar was depegging, were some of these credit cards, debit card / services that some of these places offer. They were still honoring the $1 peg. So luckily, people had that option. You did bring up, and I had mentioned to you, I had $1,500 or so in USDC while that was why it started. And I just quickly just bought Hex. I figured that was my best,
right.
Why not?
Seems like that's what a lot of people did. A lot of people did that. A lot of people bought Bitcoin. Yeah, right.
Yeah. So I caught that around, I don't know what it was, 6 cents or something like that. And was, fine with it. That's where it would have gone anyway. But we saw a lot of movement. I wasn't too worried about it not coming back. Like, I didn't think it would just lose its peg and fall. I just didn't know how long it would take to actually get back to that point. Apparently, whenever the banks opened on Monday, they moved some money around and they got the peg back. Some other weird stuff is happening too, though, because you see CZ moved a bunch of money out of the Binance the BUSD token. I don't know that it has purchased anything yet still, but there's $1 billion sitting there where he claimed he was going to move it into Bitcoin, Ethereum, and some of the other coins. I think he said Ripple too. So again, who knows? It's one of those things where you just have to really have faith in what you're doing. Never really had a whole lot of faith in the stables. We've always kind of worried about Tether. We've always worried about BlackRock's injection of the USDC. They could really do what they want with it at any given time. But there's enough people that use it. I think it could cause, a lot of trouble for them if they decided to do that. So, we got through it. We'll see how it goes moving forward. I do know the sacrifice address for PulseChain moved a lot of USDC into DAI. DAI was, it's backed by several things, even though it's 30% backed by USDC, still 70% of other stuff. So, a little bit less risky. And when that repegged, I believe that amount that was moved over made a profit of about $3 million. To be honest with you, just as it repegged back to the dollar. So pretty interesting stat there.
I want to focus a bit more on the stablecoin thing, because I think you brought up a great point. You did say that, you and I have kind of always preached and just believed ourselves anyway. Not that we necessarily, I think I actually have been more adverse to them than you have even, but that we don't rely on them that much and know that this risk is out there. Yeah. Now, while this has to do more so with, once again, legacy financial systems muddying up crypto, not necessarily crypto itself, with what's happened with USDC, Tether has had, FUD dating back, basically every market cycle. And I just don't think it's a wise idea. And I know you agree with this. And, for anybody watching, you can do what you want. It's not necessarily investment advice, but it's how I would handle, dry powder, cash on the side. I never have it sitting in stables. I shouldn't say never. Like, if in the past, when I have taken profits on something, and I know that I'm going to redeploy it in a matter of what I think is weeks or less, you know, that this is a number that you feel comfortable with, like whatever that amount of money is for you that you're okay leaving in stables for a while, I'll let sit in USDC, like in my wallet or whatever, before I'm ready to swap it out again. But I'm not like, you know, when I have a huge lump sum, buying USDC and letting it sit there for months on end before I deploy it. I mean, first off, yeah, I'll let you give your opinion on that, Ewok. I mean, like, how would you go about that? And in lieu of doing that with your dry powder, what are some best practices you've done instead?
I think moving it in and out of USD, if you already have it there, that's a much safer move. I think if you're Coinbase or your Gemini or your Kraken, you can move things in and out of USD where it is still USD. Right. You don't have to withdraw it. You don't have to do anything. And it's not like you're waiting for it to clear either. So that would be, I think, a better play than a stable coin. Depending on how long it's going to be. Like you said, if it's a week or two, a couple weeks, whatever you think it might be, USDC, or I've heard a lot of people talking about the true USD as well. Apparently that is backed by different commodities that are in a escrow account, and not so much, it's not related to crypto, is more, it is the escrow that it's tied to. So for some banks that don't even like crypto to begin with, if you can get it into true USD, that wire doesn't really show that it's a crypto. Pretty cool. I know Funding Jim talks about it a lot. So it may be a play that I start to use. And because it is an escrow account more than a crypto account, it may hold a better peg. So moving forward, that's an option for us to, to look into. But yeah, I wouldn't sit through a whole bear market. Like if you're going to take profits as it's rising and you want to hold it for the next, downturn in the cycle, whatever it may be, that's a long time. I would suggest putting it into, I don't know, USD. Yeah, value of USD is your spending power decreases the longer we wait too. So it's one of those really weird things where you flip a coin, which is going to lose value more. And, honestly, if you're long-term minded, something like Hex that does produce yield, even when it's going down, turns into a lot more on the next run. So that's kind of my play. I don't let things sit around too much. If I need them, I'm going to use them. I'm going to pull them out and use them, but I'm not going to just pull it aside and just have it sit there, especially, with the product that we have in Hex.
Well, yeah. And I think that's something a lot of people saw with this incident last week is like, I would rather just put it in the actual cryptocurrency or the token instead of holding, stable coins. But right. I agree with you 100% on the USD thing. Like when I want to DCA a cache of, whatever, a bag of money or whatever, I go to the exchange of my choice, funnel it over, and I just let it sit in USD and kind of DCA into whatever I want to DCA into. And it's always a sum that I'm not going to leave even in USD just sitting on an exchange for a long time either. I just don't see the need other than a quick utility. And I made a video about this like 3 months ago. I just reposted it when the depegging of the USDC happened last week. I like to use the stable coins purely as a utility. USDC is the biggest liquidity pair with Hex, and obviously that's the main thing that people have bought Hex with historically. And so there's use to it and everything, obviously. But I'm with you. I would just much rather not even hold stables at all. And the other thing is too, and I get your point about like just buying the crypto, whether that be Hex or whatever it is you're into. I'm with that. I understand that. But obviously also now Hex earns yield clearly. But if you really are, you see the volatility of this market. Hex, for as amazing it is, was down 95% too. Yeah. You want to take advantage of prices. You know what I mean? You do want to DCA in when you get, if you see that something's in a downtrend, you want to DCA in optimally. I think it's a pretty good idea. And I talked about this in that USDC video. I think it's a good idea to have multiple banks. It's not a great thing to be saying right now, but like, multiple banks that you trust. And I say multiple, so you are differentiated. You want plenty
Right.
of off ramps. And just, especially in an environment like this with interest rates up so much, you're getting the least paltry amount of an APY in a high yield savings fund that you could get in a long time right now. I mean, you can get almost 4%.
Yeah.
I understand it's not really 4% at the end of the day with inflation and all these other things we're adjusted for. But instead of totally just letting it sit there like in an exchange where it's in danger as well and not likely earning very much yield, I don't mind having it spread out across a couple banks like that. And then when I'm ready to pull the trigger, I just pull it out of there.
Yep.
That's
I
what
agree.
I've always been a fan of doing. So,
Well, and the one thing we discussed this the other day, you and I did, about the liquidity. It used to be the majority was USDC, but when that happened, a lot of liquidity got pulled, and it ended up being ETH hex. There was just as much there as there was on USDC. So, yeah, I mean, I agree with you. Don't use the stable coins. We talk a lot about not leaving money on an exchange. Get in, do your business, get out. I kind of equate that to the stable coins as well. You use them for what you need, and you get out of them. So I just don't like having stuff sit around like that too long, because usually you are keeping it. Well, you can keep it in your MetaMask wallet or whatever it may be, but much safer than sitting in a Coinbase or a Kraken or something like that.
Yeah, I agree with you 100%. And, looking at that a bit further. So I want to ask you this. So regarding some of these events that did happen last week with the banks, and if you guys are here and enjoying the content, hit the like. We very much appreciate it. In terms of these banks, so obviously Silicon Valley Bank last week we've discussed. Credit Suisse now. There was another Signature, I think, bank in the States. Credit Suisse, obviously, as well, one of the biggest banks in the world. So we are having a banking crisis, and this may have been an inevitability with, again, how long the Fed has been raising interest rates. And now things are starting to break. It's not just that we've seen inflation come down. I mean, that's the number we see. We have no idea what it really is. We never really will. It's whatever they decide to throw out there. You can anecdotally kind of see what inflation is for you. But with these bank runs and seeing some of these disasters happen, Ewok, where do we head from here? How much worse do you think it gets with the banks? We're going to go into the FOMC next, because that's going to be a big deal. It's a week from today, the 22nd of March. But assuming nothing, just where we are right now with where interest rates stand, do you think this just exponentially gets worse? Because that's the thing that everybody is starting to talk about, is they're throwing around that word contagion again, just like they were at the end of 2022 with crypto exchanges and the domino effect and yada, yada. Do you think that happens? I mean, we already have seen like 3 or 4 dominoes. So
yeah,
what do you think? Where's this
going?
I
do. I think some of these smaller banks could pay a heavy price. People are, what looks to me, they're pulling their money out of the smaller banks and putting them in the ones that are too big to fail, that they know will get bailed out. And I think that could be catastrophic for the smaller banks, only because, let's go back to what banks actually do with your money. They don't necessarily invest your money, but they keep your money on a ledger. And with the money that they have deposited, they can take loans out against the money that they hold. Well, people start pulling money out and they no longer have that backup of money, which then they become over leveraged. So that they don't have that collateral level that they had when they initially took the loan out in the first place. So yeah, I could totally see some of these smaller institutions paying a heavy price for that, because as people pull out the money from them, They're putting it into the bigger banks, the ones that have government support, more backing, so to speak. Did I lose you?
No, I'm here. It's a
Okay.
camera issue again. Go ahead.
Gotcha. But yeah, I mean, I see that a lot of smaller banks are probably gonna hurt for a little while until things get turned around. Hopefully they make it through. Hopefully people just, don't panic and don't pull the money out. As we know, if everybody went into the bank to pull money out, they would run out of money extremely fast. They just don't have it on hand. So that's not even really an option for most people that have a substantial amount in there. You can't pull more than $1,000 or $2 out at a time without waiting a couple days. So,
Right.
yeah, I see it. I do see it causing a snowball effect. Unfortunately, hopefully, some of these local banks that we, come to like and know the people there. Hopefully, they make it through.
Yeah, and it does make a lot of sense that people would pivot and do that and be moving into the bigger banks like that. It sucks. It's just the nature of the beast. But hey, this is what the government and what the Fed have created.
Yeah.
We know who they're going to bail out and get in bed with. So it's
Yep.
like, no, I guess I'll just get in bed with them too, basically.
Yeah,
So
might as well. I mean, right?
yeah,
It makes the most sense to cover your ass kind of thing.
yeah,
Um, I don't see why you wouldn't do that, but
right.
again, they've kind of created this monster, so we'll have to see how it plays out.
Right. So moving our attention to what is going to happen next week. So we do have a very key FOMC. It's probably going to have the most eye. I mean, it is going to have the most eyes on it of any that we have had so far. Next Wednesday, the 22nd, where Powell, despite last week, literally just last week, sounding, assuredly that they were raising rates again, and his tone and the way he sounded and everything sounded like, I mean, a lot of people, most people actually, were betting on another 50 going back to, I should say, 50-point rate hike after they went down to 25 the last time around back in January. We talked about how he got grilled by Elizabeth Warren and stuff like that, and just the tone that he had sounded pretty hawkish with how they were going to treat things coming up. That's all before the events of this last week. We we have all these issues going on with the bank. Jerome Powell, is under lots of pressure now, personally, I think. The Fed, which we discussed last week, Ewok, is a creation by the government. So they're basically getting kicked while they're down, even though all they're doing is trying to clean up the mess of their bosses.
Yep.
So I'll just ask you, I guess, here are the scenarios. We have, I don't even think this is on the table anymore. I'll be honest. We talked about this the other day. It's not even, I don't think, on like the projection pages for what the rate hike could be anymore, but a 50-point rate hike, which I think is extremely unlikely, a 25-point rate hike, which would be in alignment with what they did in January. Do they do nothing at all? Or do they begin cutting, actually, which I don't think that. What do you think they do here? I know you were kind of staunchly thinking 50 before. I kind of was too. I mean, based on how Powell was sounding, but now I don't know. I don't even know if I think maximum we could see 25, and I'm not even very confident in that. So where are you at here?
Well, I think maximum we see 50. They're still printing money. They printed a bunch of money to bail these banks out. So we know they're back to printing, which is going to hurt the inflation rate. So do they take that bold move and go 50? I'm not sure. I was still kind of thinking they might, to kind of even that out, the printing that just happened. Now, if not, we will definitely see 25. I don't think they pivot yet. I don't think they don't do anything quite yet. Maybe when do we have a May and a June? Is there?
Yeah, May and June. Yeah, are the next
So
ones.
I think May or June will be our pivot. We'll probably, like I said, we'll definitely see 25 this time, probably 25 next time, and then I think we pivot. That's just my prediction. I think we still could see 50 though. But the more and more it looks, I think 25 is probably where it's going to end up.
Yeah, it is interesting because it is kind of like they're talking out of both sides of their mouth, even if they do a 25-point rate hike, because of the money printing that we're already seeing. And it's just kind of like, how long are they going to let this problem go on? Because the larger that these stories get and the bigger the banks, the more pressure there's going to be on to stop hiking interest rates. So we've talked about this in the past. It's hard to forecast out something that's multiple months down the road, especially once again, I've said it like a million times, but everything that's happened literally in just the last week, it's really hard to predict what's going to happen in May or June right now. So, I guess I could see one more rate hike, but as I sit here right now, I see them definitely pivoting by May. I mean, I feel like they're going to have to by that point. And either way, here's the great thing for us. I mean, like, we really don't give a shit about like legacy finance. I mean, we do in terms of like knowing where macroeconomics are and stuff, but we're not at the whims of these people necessarily. Well, I say that, but then again, we've had to look at like what they're doing,
Yeah.
But I mean, but what I'm saying is we're in a market that moves differently in more ways than one than those markets. So, to me, we don't really care that much about these banks going down. Like you said, it's almost a positive thing for us. And again, this is why, I mean, I'll double and triple down. I really can't be convinced that we're not in a new cycle and in a bull market now. I mean, we're at the beginning stages of it. I think I sent a text to you the other night that I thought 30K for Bitcoin by June. I think that was nowhere near aggressive enough now. I think we'll probably get that easily by May. At the rate that we're at right now. So
I think your can of hopium is too big.
I don't think it's hopium. It's I think it's realism, basically. I don't know what else to tell you. I mean, like, no, I'm not a hopium guy. I mean, it's just I think it's realism, just looking at what's happening right now. And I mean, you were here with me for the whole ride down. We both together thought that Bitcoin would be into the lower teens. I mean, practically was, but
yeah, it's close.
So, I believe that there. I just try to look at what's in front of me, and just with everything that's happening right now, I think this is crypto's time to shine. And I'm not saying that we're going to get anywhere near new all-time highs. 2023 should still be an accumulation year. And I'm not saying that we're going to totally blow past 30K through the second half of the year necessarily. I think there's a chance to get to 40 or 45 maybe, but I think that's like a best case scenario. But what I'm saying is, if people are on the sidelines still with these things going on and with the Fed going to pivot, this half of the year by next quarter anyway, I don't know what you're doing not in the market. That's just, I would feel like an idiot, frankly, if I was sitting there with funds on the side and still waiting for something else. I mean, I think we're getting down to the last chance, because when Bitcoin's over 30K, the alt season that will follow will melt the faces of the Bitcoin gains.
That is
close.
That is the truth. Yes. Still the DCA strategy is the best one at this point, because we do have people like you that say that it's over. You have people like me that say I'm still not sure, and then you have other people that say nope, definitely not over yet. So those are becoming very few and far between. Those people that say definitely not. I'm still somewhat undecided on that side of things, but I think we could still see another dip down. But either way, dollar cost averaging is still going to be your best bet to enter the markets, I think. No financial advice, obviously, but that strategy seems to play out the best for the long-term mindset investors.
And and for your defense, as wrong as you've been about this bear market, you primarily are looking at Hex. You know what I mean? And I do understand that. So you're not really going to concern yourself as much with like where the Bitcoin price is going. Hex has been moving on its own for a while now, and we have thought that
we have called the bottom for that since February or January, I think it was, that we said
late
that
December, actually, I believe. Well,
wherever
that's when it was happening, but
whenever we hit that 1.7 cent area, we both said, I think this is it. Probably not going to see these levels again. And there were still, people waiting for the penny, and it never went back there. So yeah, I mean, imagine that now saying, I wish I would have bought that. I wish I would have bought the penny. I wish, or the 2 pennies or whatever it is, now that we're sitting at 8 cents.
Right.
The same thing can happen to Bitcoin. Although again, for me, I'm not really investing in Bitcoin, so I could care less.
Right.
So you're right. It doesn't matter to me whether we did or didn't hit the bottom in Bitcoin. I know there's other people that don't feel the same way, but for me, it doesn't matter really.
Well, it is one of those things that the most of the market is going to move with Bitcoin's trend. So, it'll be interesting. You and I obviously both have talked a lot about the flippening and ETH overtaking Bitcoin, maybe even as soon as towards the end of this cycle.
Well,
Who
that
knows?
also depends on Gensler, what he said today, that, now they're considering Ethereum a security.
Right.
So that could potentially impact that whole flippening that we saw or thought may happen this cycle. That could go completely out the window if that's the case.
It could. Yeah, it could. Unless, people would drive up the value of ETH anyway, eventually. I mean, we'll have to see how it goes. But yeah, it's going to be this cycle is going to be really interesting, especially now that we are seeing it really kick off with the failure of all these banks and the rate hikes. This is going to be a really unique story, I think, as we get down the road. And people would definitely remember this. We got more Hex saying 40K Bitcoin in late April. Okay. I mean, I'm not going to, I'm not going to act. I'm not that bullish, I'll tell you that. But
late April, early May, he says.
Oh, okay, yeah. And then next thing he says August or something like that.
Yeah,
So.
maybe June.
Yeah.
Maybe.
Yeah. Either way, I think it's going to be a good year. So,
hey, we take 1 second?
Yeah.
I'd like Brasology to. I'm not sure what Fed Now is. Do you know?
I don't. I thought it was a joke of some sort. I'm not sure what it is. What is Fed Now?
If you can elaborate, Brasology, that would be cool. I'm not sure what that is or what you're talking about.
Oh, yeah. So, Federal Reserve to launch instant payment service Fed Now in July. This is
that a
breaking.
CBDC?
This is breaking. Last few hours, I've seen these articles. And trying to get it to load. The Federal Reserve said Wednesday it will launch its long-awaited instant payment service, Fed Now, in July. The instant payment network will settle payments in seconds with the capability to support consumer-to-consumer, consumer-to-merchant, merchant-to-merchant, and bank-to-bank transactions. With the Fed Now service, the Federal Reserve is creating a leading-edge payment system that is resilient, adaptive, and accessible, said Tom Barkin, president of the Federal Reserve Bank of Richmond and the Fed Now program's executive sponsor. The launch reflects an important milestone in the journey to help financial institutions service customer needs for instant payments to better support nearly every aspect of our economy. According to the Fed, a mix of banks of all sizes, including the largest processors and the U.S. Treasury, are on board. The central bank is continuing to speak with financial institutions and service providers to test the program. Interesting. I'm not sure what to make of it. I mean, this is the first time I'm really reading this. I don't know a lot about it.
Yeah, sounds like the introduction to CBDCs, kind of.
Familiarizing with that idea, definitely. Yeah.
Yep. Interesting.
Yeah. Thanks for the shout out on that, Briz. Yeah, I'm going to read more of this later on. But yeah, really interesting. I haven't even heard anything about this at all. So yeah, it seems like they're trying to warm me up to it. So we'll see how that goes. So we've been talking about Hex. We're going to get into it more specifically now. If you guys are here and enjoying the stream, do us a favor and hit the like button. We very much appreciate it. It helps the channel grow so we can attract more folks over here. Yeah, and I am with you, Wallison. We want V3 testnet here soon, and that's what we're going to talk about here for PulseChain. So Richard did release a bit of a PulseChain update very early Tuesday morning in the wee hours of my day anyway. Yeah. What do you make of the latest update? And, Richard, has kind of been on a tweet storm over the last couple of weeks, just kind of giving his thoughts on many things, but it's cool to see, again, what seems like the real RH and just seeing what his thoughts are on a lot of this stuff right now. But more so, obviously, we're concerned with what's going on in the world of crypto from him and what's going on with PulseChain. So what did you make of his latest update? And then I saw, earlier today, he even talked about, V3 coming soon.
Very
So
soon. He said
what do you
very
think?
soon.
Very
Yeah,
soon. Yeah.
I mean, the update was good. The only thing that probably gave me a little bit of concern was the fact that the indexing was stuck at 95% because he said it had been for a while. So I don't know what that means. Is there just that much information once you get that close to being finally synced, that there's that much happening and it does take a little bit longer? Or is there a problem, which kind of would suck if they have to go back to the drawing board to figure out what the problem was. But no, it's bullish, and he is, he's being bullish as well. He's definitely, stating how close we are to V3 testnet, and it can only be good things, right? The sooner that happens, the sooner we get mainnet launch. So very bullish. And yeah, back to your statement. It is the real RH. It's always been the real RH. It's just, the whole marketing, campaign that he was doing was all a show. And, we all that know him know that. Unfortunately, it rubbed a lot of people the wrong way. But yeah, this is the real RH, spitting facts, talking about, how the government is taking our freedoms and our rights away, and those type of posts. And he is looking out for the normal person. He is trying to help. I mean, that's who he really is, I think.
Well, I have to ask you this with that statement, saying that, this has always been the real RH and that campaign was mostly just fabrication. Are you saying right here, right now, do you think the Red Bull can rumor is false? Are we not? Is that not what he's working with?
I don't know.
Tootsie Roll?
I don't know that he would lie about something like that, but
okay. Well,
yeah, that's not.
You just said it was fake.
I didn't say it was fake. I said that the persona that he was putting out there with the whole spending money thing, that was all.
Okay.
That was all a show.
Okay.
As for the Red Bull can, I have no idea. I don't really want to know.
Okay. All right. Well, I just figured I'd throw it out there. It was one of the things that was discussed. So, but yeah, a lot of updates from Richard as far as Pulse goes. It does sound like V3 is closer than it could ever be. And it does seem like, it's funny how the price going up just makes people shut up. I mean, we've seen Hex do a 5X already this year. He tweeted that earlier today, I think it was. And I think people are starting to remember, like, oh yeah, this is what it means to have like a VC type investor mindset, or just looking for something like this to come out. Like it is going to take a little while. You just have to be patient. And, we've talked about it many times, like forget about it, move on and do something else in the meantime, and I think that's kind of what people have done. And now it's nice. It's a nice reminder of, what a great product Hex is and how much it's been going up. And forget PulseChain. I mean, Hex itself is getting, a lot of attention right now. We're seeing more influencers than ever start to get on board. Ivan on Tech has been talking about it a ton.
Nonstop.
Yeah. So, we didn't really have that listed, but let's take a quick detour there. I mean, like maybe with Ivan on Tech specifically, what do you make of his continued support of and bullishness on Hex and stuff like that? And are there any other rumblings I haven't really seen? I don't know, but like as far as like the other bigger influencers talking about it, I mean, it just seems like, and I'm guessing it's because of like SBF and all the scams and the actual scams in crypto that like Bankless and those type of people support while calling Hex a scam.
Right.
Like what do you think? Do you? It seems to me more than ever that Richard Heart Hex is really starting to become, in those people's eyes. It's funny to say because it's ridiculous,
real,
but finally, yeah, right, yeah. What do you make?
The walls are coming down. We knew they would eventually. it was just a matter of time. Once people, the longer something, when Ethereum came out, everybody said it was a scam. Same with Bitcoin, same with Hex. So it just takes time. The longer we stay in the market with 100% flawless operating time, and the more eyes that get on it when this thing isn't going to zero anytime soon,
No.
the more people talk about it. I forget who it was that somebody was actually charting the Hex chart who normally didn't talk about it either. I can't remember who it was today. It was earlier today. But yeah, they're going to start talking about it, and they're going to probably buy bags of it if they're smart, and which in turn causes people to talk about what you have, right? Normally that's how it goes when these influencers are talking about stuff. It's because they already bought a bag,
Right.
and they want everybody else to check it out too. So yeah, I mean, it's good until somebody like Peter McCormick or somebody like that comes out and says he was wrong about calling Richard a scammer and how everybody was going to lose their money. There's been so many over the last 3 years that can't even count, but slowly they turn around and they're coming around. So I think that'll only get better as time goes on.
Yeah, I'm with you. And it's a beautiful thing to see. I think we needed a continued washing out of all this garbage in the crypto space. Now, we're still going to get it. I mean, it's already happening now. I mean, like with the prices going up, that's another caveat to say that we'll tell people to look out for. Like with these prices going up, and now that we're definitively in a bull market, regardless of what Ewok says, you're going to see a lot of crap. I mean, you're going to see all kinds of new crap pop up, and it's up to you to kind of be able to discern what is crap, what's legitimate. And that's why right now, we're still early in 2023. A lot of people obviously watching this are like full bore 100% Hex, and that's perfectly fine. If you're somebody that likes Hex, it's a big allocation of your portfolio, but it's not all you own. Remember that it's still, you still want to be safe right now. Like I wouldn't be venturing out into a lot of newer things at this point, because we haven't seen another huge like narrative erupt or anything like that. I wouldn't just go chasing after AI plays. I mean, I'm seeing it from people that I used to think were more credible, like on YouTube right now, like listing off all kinds of AI stuff. And it's like, dude, what are you doing? Like, come on, I'm not saying to ignore part of the industry, but it's like, stop, coattail riding, bandwagon riding,
Well, a lot of those guys will do that. They'll post a couple different videos. If the one happens to be right, they'll leave it up. If the other ones are wrong, they delete it. And that's
right.
that's always been the play for a lot of these influencers. That's how they work it. And now we finally smartened up and got wise to what they were doing before. And the Hexicans are really good at keeping receipts. So
Right.
there's all kind of screenshots about some of the shit that these guys actually promoted and probably got paid for, that they've kind of scrubbed from their platform, but there's still proof of it out there. So
right. Yeah. Yeah, Hexagons definitely do like to keep receipts. We promised this last week. We didn't get to it, and it may not necessarily be the most entertaining topic, but I think it's worth exploring because we had somebody ask it last week. We didn't quite get that far, and Ewok, I know you delved into it a lot, but there was a lot of FUD about Hex, not necessarily about Hex. I mean, not just Hex. This has been happening with every crypto, basically. But specifically how Hex, and you're going to have to correct me because I keep forgetting, but how it passes or fails the HOWEY test, whatever you have to do to not be a security. So I'm going to let you kind of take it away with that a little bit, because I do think it's an interesting conversation, because I think I don't want to say the conclusion before you even start, but with you and I speaking about this in the green room before the show, it's kind of like the answer is always going to be that the SEC is going to try to word things in a way where they can get their fingers into anything.
Sure.
And ideally that's what they want to do.
Yep.
So with that in mind, I'll let you take it away and kind of go over the main points here.
Well, so yes, to your point, before we even get started, the legalese of a lot of the writing in this stuff can be interpreted many ways. But the four prongs of the HOWEY tests are investment of money to a common enterprise with the expectation of profit derived solely from the work of others. Now, that's the way Richard has always said it. I see that they've removed the word solely, not knowing if I'm sure there's a reason for that. Again, the ambiguity is only in their favor when they do those type of things. So you have to fail the HOWEY test to be considered a non-security. So we don't want to pass it. Passing it means it is a security and not a commodity. So we keep that in mind. So we go actually to the actual site. You want to go to the U.S. Security and Exchange Commission site.
Yeah, I want you to read that entire page.
Well, we're not going to read it. But, we're going to go through some of these, the investment of money. Now, it only has to fail one leg to be considered a non-security. Obviously, just about everything takes the investment of money. So that's, you might as well throw that out the window. It doesn't really, in order to get anything, whether it's stocks or crypto or anything, it starts with the investment of money. Now, many people define money as different things, but we're talking actual fiat currency. But here it says another digital asset or other type of consideration. The common enterprise thing is very good for Hex because there isn't really a common enterprise. It's a smart contract. There is no company. There is no CEO. There's no building. There's no staff. There's no board. Anything like that doesn't exist. We have we have the creator who is Richard, but as far as I'm concerned, he's just a cheerleader at this point. He's a good marketer, and that they do get into marketing things down here later as well. And the reliance on the effort of others. With Hex, the contract, you do your own work. That's why it was set up that way. You create your mint or
careful with your words there.
I am being very careful. You perform the lockup of your coins. So you do that on your own. They get burned. And then the contract takes over. And then when it's done, you end up minting your yield at the end. So nobody else does any work. If you don't do the work, you don't get the inflation. So a couple things already. So we've, already pretty much failed the HOWEY test in more ways than one. But then as you read on through it, it is a decent read if you want to get into it. Of course, people that invest in things are going to have reasonable expectation of profits, but there is some things in here that it says where you kind of, it's a known thing. Let's go down here a little bit further. It says other relevant considerations. It says here, when assessing whether there's reasonable expectation of the profit derived from the efforts of others, the court looks to the economic reality of the transaction. And then it says, although no one of the following characteristics or use of consumption necessarily is determinative, the stronger the presence of these things down here, the less likely the HOWEY test is met. And the very first one is the distributed ledger network and digital asset are fully developed and operational, which it is. Hex was released as a finished product. There's no roadmap. There's no promises. There's no future work that is going to be done. So that's a big one. It says the holders of the digital asset are immediately able to use it for its intended functionality. Also, day one, this was available to us, the functionality of it. So, yeah, I mean, there's just a lot of things in here that come to light with it. And as you read down through these, all these little footnotes, it says the last one, it says where a purchaser is not attracted solely by the prospects of a return, but is motivated by a desire to use or consume the item. Well, yeah, there's also some things in here about promoting it as well. That it's understood that what they call the AP, which is the what does the AP stand for? I forget the actual participant or something like that, is active participant. It goes into the, does the purchaser reasonably expect to rely on the efforts? And then it goes on to say how they're also understood that they're going to talk about it and they're going to promote it, essentially. So yeah, it is a good read. And there, like I said, there are several things in here that talk about why Hex is pretty much one of the few that was released a finished product. There is no company. It's just a smart contract. It's locked. It's immutable. It can't be changed. And a lot of the things that have been developed within the Hex community, like the Hedron, like the Maximus, Icosa, all these things, they're doing it because Richard taught that, that you want to release a finished product. You want these smart contracts to not have backdoors. They're finished. They're done. And when you can say those things, it definitely increases the odds of a fight if there ever were to be one with the SEC. So
it's a great idea because, you're creating something from the beginning like Bitcoin that is a finished product. Now, the quote, I guess you would say the disadvantage of that is that you can't edit it, but that's a feature and benefit, obviously, because you want this to be a commodity. So what you do is you do have the innovation of the things like Hedron and Icosa and these different things built on top of Hex that enhance it, make the long-term staking and the contract more sticky. And I think Hedron is definitely an idea that Richard likes, and has been supportive of. And one of the few, I think, as far as things that have been kind of built directly in relation to Hex. But, anything that's going to help that longevity is great, and I think people have clearly supported Hedron above and beyond anything else that's been built on top of Hex, and I think with good reason. But that's what's cool about it is like, these things are all released as finished products, which should make them commodities in our eyes, obviously. However, people want to change terminology and definition of things, but that's what's so great about it too. You leave it open for somebody to innovate and make it better and have more things in the ecosystem. So yeah, I think it's been great.
Well, and the thing is with Bitcoin, it's not a finished product. They're all, they introduced SegWit and the Lightning Network and things like that. So, you can't say that it was done as a completed project, nor Ethereum. There's still ETH 2.0. Now they've switched to proof of stake, which could end up getting them in trouble. So who knows if that will the improvements that they've done, which are good in one sense, maybe bad in another, as far as decentralization and who owns the nodes. We'll kind of have to see how that plays out. But we can't launch PulseChain as a complete product either, for the same reason. You have to leave that open so that if things do improve at any time, you can patch those in. You can always make improvements and changes, things like that. So, unfortunately, you can't launch a layer 1 as a completed product. So, just not possible.
That's a lot harder to do. But I think it's great, and it does lead me to this question before we finish off here tonight. And I guess in a way, it's kind of a trying to think of the best way to say this. It's kind of it's kind of an argument against something that we've talked about in the past. You, me, and Crypto Coffee talked about some of our favorite things that are launching on Pulse. But I want to ask you too, because I think with the network effect of a coin, we are seeing this right now. I know this is a swear word to many people, but I'm actually going to talk about it somewhat negatively now. So maybe your ears will perk up. But like what Jack Levin is doing with Zen right now, I said something to you the other day, Ewok, that like he has been doing so many things that I don't even know what's going on anymore. Like I know that he has an L1 called X1 or whatever in the works, but Zen is on like all these different chains, and there's NFTs, and then there's a reflective token, and I know there's been other things built on top of Zen already and stuff like that, but there's so many things going on that
Too
I
many.
kind of right that I'm kind of just like, hey, I mean, I mentored it. We'll see where it goes, but I can't keep up with all this, and I'm not really going to right now. And I ask you now, that's not at all the same as this. Richard Heart has not done that. I'm not saying that he has or anything like that. But with so many things that we've just been talking about being built like on top of Hex or in relation to Hex or like free airdrops, do you think at some point, like maybe too many things get created? I'm not talking about the things built on Pulse. That's a little bit of a different idea. But do you think at some point there's like too many things that get created where it's like maybe somebody that's new to it could get confused? I know I'm not trying to sound gatekeepy or anything. I'm just purely saying that like I'm just asking that question. That like somebody that was new would be confused. And I know I've seen this talked about on Twitter by people, and I think it's a good conversation. Again, I love Hedron. I hold Hedron. I think it's an exception big time. But yeah, I mean, do you think somebody could see like, well, there's Maxi and there, I can't even name them all. I know you know all of them, but yeah, I mean, what do you think? I'll let you go first now.
Yeah. So yes, there can be too many things. And the problem is, especially in a bear market, where you get that shiny object syndrome, where it does detract from the thing that we're building around. You start deploying capital in all these different places, and we may, had all these things not existed, I'm willing to bet that Hex probably wouldn't have gone below 5-10 cents. But because you had all these other things, you had people selling it to get into other things. Yes, it gets convoluted, it gets crazy, and the odds of somebody rug pulling on you increases every time something new comes out. They so when I onboard a new person into Hex, I don't even talk about half that stuff. Excuse me. There's just so much. You think they're having a hard time getting into MetaMask and into go.hex.com to do their their burns. It's crazy. And then you just get too many things. The muddies the water, makes a mess. So unless you're in it every day and you know what all these things are, then not only that, when it's time to mint your coins, then you've got to remember, all right, I got to do my Communis, and then I've got to do my Hedron, and then I got to end my stake. And so it's just all these different things that you have to remember. It gets crazy. And it is a lot of work. And I often wonder, what if something happens to me? Nobody's going to know all that stuff. Like, my kid, even though I'll leave it all to my kids, it'll be in my trust for my family, but they're not going to know all this stuff and where all these wallets are, and which one has Maximus and which one has Decimus, and PulseChain on this one and Pulse X on another one, and which ledger has this, and it's just like it's overwhelming, and we kind of got to get back to keeping it simple, and focusing on our main plays. I think, anyway, that's just my opinion.
No, I agree with you 100%. And I guess that's kind of what you have to do is when you are onboarding somebody. And, we again spoke with Crypto Coffee a couple weeks ago, and I bring him up because I think he's one of the best at doing this. He he understands the basics. Like, he understands the reinforcement of the basics. I mean, he has a course, literally the Hex Passive Income course, but you know, he understands the basics of it, and that people that, you know, Hex is still pretty viral. People need to understand that stuff, because that can be hard enough to some people, even if they're somewhat crypto savvy, you know. So yeah, I agree with you. Too many things absolutely hurts anything, but Hex and Richard Heart have done such a good job with the branding. And, you know, it's not like you go to hex.com and you see all these other things we're talking about on there.
Right.
You know, Hedron's not even on there.
Well,
So
another beauty of it is the community that he's created. You know, there is something to be said for that. A lot of these things that are being done are all seem to be, so far that I'm aware of, with good intent, and they're done the right way, and they are immutable contracts as far as we know. You know, they can't be messed with. So, you know, kudos to them for doing it the right way. It's just like you said, there's when you get that many, sorry to cut you off, but you know, that is one of the things too, that the community has kind of come a long way in what Richard has built, to do things the right way.
Definitely. Yeah, I agree. So, good stuff. Talked about a lot here tonight. We are at a really, I'm feeling very positive about this market. I mean, you know, we're getting into the springtime here, which is another nice caveat. You know, we're very close on that resistance point. I think, like you said, Ewok, we might finally have your arm fully twisted if we do start closing above that 25.5-ish K area multiple days in a row. We may not even have any time to hang out around there. I mean, but before you know, we could be up at 28K or something like that.
We could.
So,
well, yeah, if a lot of people see that resistance level broken and held, it won't stay long, and we could have that little run up. I think we're a little early. I'm still thinking May, June.
Well, next week is going to be interesting. So, yeah, as we talked about earlier, keep your eyes peeled. If you're into the macroeconomic stuff, I think it kind of behooves you to at least be checking it out right now, just to see where we are. But next Tuesday and Wednesday, the 21st and 22nd, Jerome Powell and the Fed will be meeting at the FOMC. We will find out if they are still hiking rates, and if so, by how much on the 22nd. And we're going to see more volatility. If you thought last week was crazy, now I don't know if we can get much more crazy than that, I'll tell you, but I think it's going to get pretty crazy again. So keep your eyes peeled over this next week. Monday and Tuesday are sure to be volatile in some direction. And then right after the announcement on Wednesday, probably too. So if you're a long-term hodler, like we profess, you know, it really doesn't matter that much in the grand scheme. I think it's a great idea. You know, I'm not going to tell anybody here what to do as far as investment advice, but I am heavily in the market right now with not a lot else to put in. So that's kind of where my stance is on it right now. So we will be back to cover all that and more on next Wednesday night, the 22nd at 8 p.m. Eastern time. We'll cover the FOMC meeting and much more. Ewok, before we get out of here, any other final thoughts, and let everybody know again where they can find you?
Yeah, so we got 40 days left. If you're interested in joining a bunch of Hexicans in some sunny, warm weather, go to hexcruise.com, find Kaylin, and she'll get you information if you need it. But yeah, 40 days until that. Otherwise, you can hit me up on Twitter, Crypto Ewok, and YouTube is Crypto Ewok 5555.
Yep, and Boi Crypto here, BOI, same on YouTube and Twitter. We will be back again, as mentioned, next Wednesday, same time, same channel. If you guys are still here and haven't done it, please hit the like. We very much appreciate it. And we will catch you all next week right here on the Creed of Crypto podcast.